Hello.
Hey, Mac.
All right. Good morning, everybody. I am Matt Church with Atlantic Coast Mortgage, and Miss Terry had asked me to come to your roundtable today and go over some products that you may not know about. So I am going to talk today about the Maryland Mortgage Program, which is an awesome program, not just for first-time home buyers. It's kind of geared towards them, but there's also other products that non-first-time home buyers can use for this program as well. It is I'm guessing that they're probably going to be lowering their rates pretty soon because they're still it's not a program that moves every day like the traditional mortgage rates. And now that rates have been dropping this week, which is awesome, I'm sure that they're going to go ahead and start lowering their rates as well. They are typically higher than the traditional rates, and that's because they are most of them are either 100% financing or they provide down payment assistance to use. So so the rates are a little bit higher, but I do expect them to come down just to kind of mirror what's going on in the normal industry. So I've been in the business. I'm now going in my 20th year, and I've been at Atlantic Coast Mortgage for 7 years now. It's an amazing company. We've been around for 12 years, a regional lender, and we are correspondent, so we're kind of the best of both worlds, where we can place loans with different investors, but we also, when we close a loan, we actually are the ones lending the money. We are starting to service some loans now, which is great. Like I said, we can place loans as well. So we're very, very competitive on our interest rates. And we do every kind of loan there is, with the exception of home equity lines of credit and land loans. We don't do those two types of loans because we're not a depository institution. So we normally you're only going to find those kind of loans at banks or credit unions. So without further ado, I'm now going to share my screen again for the third time for you.
Well, Mac, we really
There
appreciate
we
you coming
go.
on, and
Oh, it's my pleasure, believe me. Okay, and let's see if we can get this thing going. Here we go. So today we are going over the Maryland Mortgage Program, and you'll see my little code down there that you could take. Oops, let me put that back real quick for you. If you snap that code down there, it will take you to my website, which you can share with other clients if you ever need that. All right, and here we go. So what is the Maryland Mortgage Program? The Maryland Mortgage Program is exactly what I had just said. It is provides a 30-year fixed rate home loan to first-time buyers and non-first-time buyers. The difference on this loan is it's not as long as they have the minimum credit score that is required for the program. The rates do not change based on their credit score. So typically, if someone has a lower score, they come to this loan, they're not going to get gigged on pricing adjustments for their credit scores. Again, there's down payment assistance, there's closing cost assistance. There's some other really great programs with this product that I'm going to go over. Okay. All right. Can you see who is eligible for the MMP, Terry?
no,
No? Okay, so it's stuck on that one. Okay. That's
just
why,
came.
it's not just for first-time home buyers. And again, no down payment or low down payment. There we go. So who is eligible for the MMP? So they have to, the home buyers do have to meet some criteria. A first-time home buyer is considered someone that has not owned a home in the last 3 years. They do have to meet the income requirements for whatever county they're buying in. And the household income eligibility is based on how many people are in the home. So there's 2 classes. There's 2 or under, or 3 or more. Now the household income eligibility is for all household income or all household people that work that are over 18. So even if everybody's not on the loan, they do combine all the income together. If it's a student in college, there's a certain amount that they'll count towards them, but for any adult that's over 18 that's working, that's not a full-time student, they will include that in the household income. The minimum credit score that's required for the borrower is a 640. So of course, that's a little bit higher. 620 is what you can use for a conventional or a Fannie Mae or Freddie Mac loan. You can go lower on the government loans, but for this program, they do have to have a 640 credit score. All right, this is continued. So there are some different counties where the household income limits are higher. Here it says Baltimore City, and then any targeted area do allow for higher income to be used. Targeted areas, as it says here, is parts of Maryland that they're trying to revitalize, or areas that may need more housing opportunities. So if it's Baltimore City, Allegheny, Caroline, Dorchester, Garrett, Kent, or Somerset, all of those areas are targeted areas, the entire county. So if anybody is buying in one of those counties, then they're going to be able to use higher income limits. And then below that, you'll see Calvert, Carroll, Cecil, Charles, Howard, Queen Anne, St. Mary's, Talbot, or Worcester County. There are no targeted areas in there. So they're going to be going by the limits that the Maryland Mortgage Program sets. All the other counties, they have what they call it Maryland Mortgage Program Mapper, which I can always send that link to you, which will show you the actual designated areas in the other counties. That's kind of difficult though, because that really doesn't leave you a lot to look for, or a lot of inventory to find. But if you do have a client that is looking in a specific area, it's always good just to reach out and ask us if the housing, if the areas in those counties are eligible. What are the income?
Back up. Sorry. Dana said she didn't see Harford County.
Then that would be, if Hartford County wasn't on there, then that would be one where there's designated areas within that county. So they only listed, they only listed the counties that are either all in or that are all out. So that one would have, there are some areas in there we would have to look up, like usually if you have a specific address, then we can type that in and that'll tell us if it's in the targeted area.
Okay, thank you.
Sure. Again, this is exactly what we just talked about. The targeted areas in Maryland, slightly higher income. This is kind of almost just a repeat of what I just said. So next, ownership and occupancy eligibility. One thing that they have to do is it's got to be a primary residence. It cannot be a second home or an investment property. And there is a liquid assets eligibility test. So this is one of the gotchas that some people forget about, or the lender really, that they may forget about, is that the borrower cannot have more than 20% in liquid assets in their bank account. So a liquid asset would be like a mutual fund, a CD, checking, savings. They don't really consider a 401k a liquid asset because you get penalties for that. And most of the time you can only borrow that if it's as for a down payment for a loan. A stock and a bond is a liquid asset. So we have to take all their assets, add everything up. And if it's more than 20%, they cannot use this program, because they look at it like, if you've got that much money, then you really don't need to be in this program because you can put money down. So one of the things that we really have to be careful of is to make sure that we get all of their assets up front to make sure that they're going to qualify for this program. Because I have heard of loan officers in the middle of the process, come to find out, we didn't know that they had this CD because they didn't ask for it, and then they get kicked out of the program. So the only good thing about that is they have assets, so they can change. But go ahead, Terry.
Oh, I was just gonna say, Dana was asking, what about rent income?
So rent income, so if they're getting rent income, which is, I guess you're considering as border income, they can use that in the qualifying as long as the person has lived with them and have been paying rent for at least 12 months, then they can use that rental income, and it can't be more than 30% of that person's actual income themselves. So let's just say somebody was had somebody living with them and they were paying $750 a month in rent. They would need to at least be making $22,250 a month themselves to be able to use that rental income. Does that make sense?
Yep.
Yeah.
Thank you.
Sure. I don't know if you can see this. The income calculations is kind of small. And I'm not going to go over every single county. But this is just showing you the household size, what the income amount is, and then it also is showing what the maximum mortgage limit is too. So you're going to see in here 726,200 is the highest that the mortgage amount can be. And then if you look over at the income limits, you're looking at man, Allegheny County, you can make up to 173,300, and then if you go down to I don't know if I'm saying it correctly, but no, Frederick County. Okay, Frederick's 180,000 and 210 for 3 people.
Yeah.
So that's pretty. I mean, I remember a few years ago, I think 160 was the most. So it's gone up literally $50,000 in the last few years. That's pretty awesome. So they are kind of at least finally getting with the times, you know, because these programs always seem to run behind on actual what people make. So that's really good. And you know, a lot of the counties in Maryland aren't, unless you're in what's Rockville or Bethesda or something like that. Most of the counties aren't quote unquote veteran communities to DC. So the income is pretty accurate. All right.
It's interesting. Frederick and Montgomery County were the same.
Yeah. That's kind of like same thing with in Northern Virginia, you've got Alexandria, Arlington, Loudoun, Fairfax. They're all the same as well.
Yeah, that makes more sense. But
but Maryland's kind of all over the place, right? I mean, so many different. I mean, you have counties in the Eastern Shore, and you've got right around DC, and you've got Middle Maryland, and up near Frederick, and they really are all over the board. So these are some of the different programs that we have. So we have the First Time Advantage Direct, which is that's a 3% down loan. There's no down payment assistance. But again, you know, if somebody has a lower credit score and they are approved for this loan, they're not going to get gigged on those loan level price adjustments for the credit score. So that's where this is really an advantage. The First Time Advantage 6,000, that comes with a down payment and closing cost assistance lien. So it's a second lien. It has a 0% interest rate, which is great. So there's no payment on it. And it is for life. So if somebody does either refinance or sell their home, then that second lien is due. So it's a freebie as far as their payment. So they're not getting hit with that on their debt to income, but it is owed at the end of the day when they go to sell their house. So again, it can be used for down payment and or closing costs. Most people that use this loan are doing 100% financing. So then we have the First Time Advantage 3%, 4%, or 5%. So as you can imagine, the higher percent that the borrower wants as far as the rate or the down payment, the higher the rate's going to be. So it kind of goes in tiers. But this is again for the first time home buyers only. And it gives the down payment and closing cost assistance just like the other. So the other one was just $6,000. This one's 3, 4, or 5%. So for instance, if somebody was using, if they were doing the conventional 3% down, if they did the 5%, they'd get that 3% for their down payment. And then the other 2% would go towards closing costs. So they can literally almost get in with, you know, without any money at all, which is pretty awesome. this one's probably the best for conventional and FHA loans. Because the RD and VA loans, they're already 100% financing, so they may not need this, and they'll get a better rate if they use the first time advantage 6,000, because then they just need a little bit of money out of their own pocket anyway, and they do have to have 1% of the purchase price in either the deal or in reserves when they close their loan.
Mac, what about assets in a trust?
Assets in a trust, if it's liquid, then it counts. A lot of
Okay.
trusts have certain specifications to draw from, so a lot of them may have a age limit that you have to be a certain age to get it, or you might have it where you have to either be retired or it's only for buying a home or something like that. But if it's readily accessible and it's liquid and they can draw it, then they will count it.
Thank you.
Sure. And then the Home Start, this is for borrowers that have a 50% or less average median income of whatever that county is. It comes with a down payment assistance loan of 6% of the first mortgage. So that's pretty great. I mean, what, $300,000, 6% of that is what, 18 grand? So that's pretty
Yeah, that's awesome.
But on the flip side, 50% of the AMI, I mean, that's kind of low. So that's, in some counties, that would be $60,000. Can you really buy a house nowadays with $60,000 in salary? Probably not. Or if you are, it's probably not going to be it's probably going to be a fixer-upper or something, which, you know, I'm sure they're out there, but it's a lot harder to find. Oh, that was a little cool, the Oregonian bird that just flew away. So now we have the Flex programs, and this is for non-first-time home buyers. First-time buyers can use it as well. Now these rates are even a little bit higher because if somebody needs 100% financing and they've owned a home in the last 3 years, or let's just say someone is selling their house and maybe they just bought it a year or two ago, and by the time they have paid out the commissions and their closing costs and everything, and they're not going to really make any money, this would be a great program for them. The Flex Direct is it's for repeat home buyers, or they could be a first-time home buyer. I don't know why they'd use that, but it does have lower mortgage insurance rates, which is good. Again, they're not going to get hit with that that loan level price adjustment if their scores are lower. So it's a good alternative for that. The Flex 6000 is kind of like the advantage on the other first-time buyer. They can get $6,000 of down payment, closing cost assistance, and it's a 0% rate again. It's basically deferred once they sell their house, or if they refinance out of that loan, then it's due at that time. The Flex 3% loan gives them a 3% down payment. So if they're doing a conventional loan, they don't have to put any money down. Same thing, it's deferred. That second lien is deferred, and it's at 0% interest. And again, this is, if they have a really good credit score, this is probably a better loan for them, since they're not going to get hit with the loan level price adjustments, and they're going to have that second, the second to cover that down payment. So this is a great loan for that. Here's the interest rates. It's probably what everybody's been wanting to see. So you can kind of see where the rates are right now. I mean, they're pretty good. Like I said, I expect them to come down. I'm not sure when, but I would say in the next month they'll do an adjustment to this. But if you look at the first time advantage, look, that's pretty great. I mean, a 6% if somebody's doing an FHA, VA, or RD, and especially the RD and the VA, they don't need any money for down payment because they're not going to get into the closing. But 6%, that's pretty strong. You're not even getting that right now on a regular conventional loan. So if they meet those income requirements, awesome loan to go to. If you go to the first time advantage where they are getting their down payment assistance, the rates are a little bit higher on that. But again, they're getting $6,000 in free money. So as you go down the list, you're gonna see the rates go up a little bit as they get more money. And then over on the flex, those are pretty darn strong too, especially the Flex Direct. I mean, 7 and an 8, that's not much higher than where the rates are right now. Obviously they're much higher if they're a non-first time home buyer and they need money. 8%, that's a little bit higher, but they don't have any money. So it's something, at least they can get the loan. Any question at all on the rates? I'm trying to keep up with the chat. There's let's see if there's anything on.
I think I've gotten everything, Max.
Okay, good. Thank you for
Yep.
Terry. I appreciate it.
Yeah, but you're welcome.
Okay. Specialty loans. So these are, I'm going to explain each one of these in a second. These are different loans that are for different targeted area counties. So the Montgomery Employee Down Payment Assistance Loan is a loan for anyone that actually works for a government agency in Montgomery County. And then you have a Montgomery Homeownership Program that they can get a 40% of household income with a max of $25,000 towards down payment and closing costs. Greenbelt up to $15,000. And then the Maryland Smart Buy, this one is